What is up, everybody? It's your average trader here. I'm going to be going through a trade recap of a tweet that I tweeted out on Tuesday night. If you will put that screenshot up, but before we get into it, if you guys could like and subscribe on this video. I also have my other social medias in the description. That would be my Instagram and my TikTok. I post different content on each one, so if you guys want to keep up, I'm going to try to go through educational stuff, things I'm looking at, and I like to interact with you guys just to be able to understand where you guys need help, if I could help you guys out on anything. But let's get into the video. So on the 22nd, I tweeted out that I was going to see BAC. It had a big push up that day, lots of bullish flow from it, especially on the $45 call contract, which I saw on Unusual Whales. Currently consolidating from that big push at market open. Should be interesting to see tomorrow for a green or red day. And then below I had said calls over 44.50, or over 44.50, and but that was just because I saw the big bullish flow on it. And then I had also given the chart with all the different levels. So here's the day I saw it that night. It opened up that day, hit a high of 44.63, came back down, and then just started trading within this range. So it just digested what it those gains right there. It didn't give it back, which was interesting to me, right? That's what made me pique my interest in this stock. So I mapped up the levels. Let me just fix these up. I mapped out the levels on this stock, and I saw it and I had it ready for the next day on my watch list. And so I said, if it breaks above 45.50, I would take calls. But then I was also considering puts if it dropped below 43.75. This level right here that I had mapped was pretty recent, so I didn't want to use that as a put trigger. I wanted to see how the price would interact with it, so that's why I didn't say below $44 I would take puts. So come Wednesday, the stock opened up. It actually opened up near there on pre-market, and it just started coming back. We saw that little bounce there. The EMAs were stacked in a bearish manner, so that was the 13 under the 30 under the 48, and usually the way I trade is if it crosses the 13 over the 48, that would be a put entry, especially with the MACD being bearish. So obviously you can't trade in pre-market for options, so I had to wait till market open to see how it was doing. It came down, bounced close to this level of 43.75, came up, came down. So at market open, right before it opened up, it dropped below this 43.75, and we saw that there was a lot of indecision. It kept going down, and then it came back up, touched the $44, came back, bounced off the 43.75, came back up, touched the 44, and the EMAs were still bearish. And then this is where we had the break. That was around 10:45. We had this break here, and that was around 43.75. So you could have bought a $43.50 put. Since we saw our next level of resistance was 43.40, you would be in the money with it. So you could have bought in at around 10:45. Let's take a look at the minute chart. For some reason my level didn't come through, but it broke at 10:45. Yeah, pretty much 10:45 it broke the level. So with the EMAs being stacked the way it was, the level break, and also the MACD being bearish as well, as you can see, it was trying to go bullish and across the bearish, that just screamed getting into puts, right? It was the perfect setup. So let's take a look at how that contract actually performed. So here's the chart for the 43.5 BAC put that would expire the 25th of March. We said around 10:45. So that would be, let's say you got in like at 10:47 after you saw it. So the high there was 39 cents, as you can tell up here in the corner it'll say. The high was 39 cents. Let's round it up to 40 cents, which would equate to $40. If you bought one contract, that $40 contract would have kept going and going and going and going and reached a high of $73 per contract, and that 73 was around 250. No, sorry, 150. What was happening at 150? It hit the low of the, pretty close to the low of the day. Yeah, actually it was the low of the day. So you could have sold down here for two reasons. One, it broke through this. If you had bought multiple contracts, you could have scaled out here. But you could have also kept holding because you saw that the price kept being below the 13 EMA, right? And it was not closing above it on the 5-minute chart. Not closing above it. Kept reacting well as a resistance, and it broke this level. Could have kept holding, and then came here, bouncing. It was not breaking this level, so you could have scaled out half your position here, right? Entry here, scaled out half, and then closed out the rest of it here for the max potential gains. Because it's great that if you would have done that, because it retested, came back down, and then we started getting closes above the 13 EMA. So that's when you start to consider, wait, I should consider getting out of this position. You could have kept holding to see a rejection of the 30 if you wanted to, if you had a couple runners. Runners meaning you left like one contract to see how it would do. And that's usually, people like to do that just to see if they can get in any more gains. But if you're a small account, obviously, you would want to, manage your risk and lock in your gains to build up your portfolio. But yeah, you see it comes up to the 30, doesn't close above it, and here we start seeing closes above it. And then immediately at 325, that's when you should have been completely out of this position. So you still would have had some gains. I think around that time it was around $60 per contract. So from $40 to $60, that's $20. That's a 50% return. Anything more than that would have been over 50. If you had played the exact level break, I actually wrote it out here in the next tweet where I quoted it. If you followed the levels on the chart posted, you see it broke above 43.75, which was right here, but came right back down, signaling a put entry. $43.50 put went from $37 from entry, so we said 40 to round it out, to a high of $73. Not quite a 100% gainer, but still 97%, and that's pretty solid. So if you took just this one trade on Wednesday, you would have hit a 97% gainer, or between 50% to 97, depending on when you got in, right, and when you exited. But that's still an amazing trade. All of that because we stuck to our strategy of the EMAs that I have been doing for a couple weeks now, that has been working for me, and pairing that with level breaks. But yeah, like I always say in my TikToks, stick to your strategy. It helps beat out emotions. If it ever leaves your strategy, exit, right? Don't try to hang on hoping that it will come back, right? If you bought in here, you could have gotten lucky, but some days that doesn't happen. It drops and it just goes. It just goes, and you don't want to lose more than you need to. So stick to your strategy, what works for you. And as always, if you guys have any questions, you can reach out to me on Instagram. You can tweet me. You can send me a direct message on TikTok, or you can have a comment below on this video. But yeah, I hope this was informative. I'm going to try to make more of these. And if you guys have anything specifically you guys want me to go through, let me know. I'm open to suggestions. But again, until next time, guys, peace.